If you are a freelancer earning $75,000 or more, this video could save you $5, $10, or even $15,000 a year in taxes. But you have a deadline, and it is coming fast. March 17, 2026. That is the last day to file Form 2553 and elect S-Corp status for this tax year. Miss it, and you wait until 2027. So let me break down exactly what an S-Corp election is, who it benefits, the real math at different income levels, and how to actually file the form before the deadline. First, let us talk about what an S-Corp election actually does. Right now, if you are a sole proprietor or single-member LLC, every dollar of net profit hits you with self-employment tax. That is 15.3% on top of your income tax. 12.4% goes to Social Security, 2.9% goes to Medicare, and you pay both halves because you are both the employer and the employee. $100,000 of net profit, that is roughly $14,000 just in self-employment tax before you even get to income tax. An S-Corp changes the math. Instead of all your profit being subject to self-employment tax, you split your income into two buckets. Bucket 1 is a reasonable salary that you pay yourself as a W-2 employee of your own S-Corp. That salary is subject to FICA taxes, the same 15.3%. Bucket 2 is everything left over, which flows to you as a distribution. Distributions are not subject to self-employment tax. You still pay income tax on all of it, but you skip the 15.3% on the distribution portion. That is where the savings come from. Let me show you the math at 3 income levels so you can see if this makes sense for you. At $75,000 in net profit as a sole proprietor, your self-employment tax is about $10,600. That is 15.3% on 92.35% of your net income, which is the formula the IRS uses. Now, as an S-Corp, you might pay yourself a reasonable salary of $45,000. FICA on that salary is about $6,885. The remaining $30,000 flows as a distribution with zero self-employment tax. Your savings, roughly $3,700 per year. At $100,000 in net profit, sole proprietor self-employment tax is about $14,130. As an S-Corp paying yourself a $55,000 salary, FICA is about $8,415. The remaining $45,000 is tax-free from a FICA standpoint. Your savings, roughly $5,700 per year. At $150,000 in net profit, sole proprietor self-employment tax is about $21,200. As an S-Corp paying yourself a $70,000 salary, FICA is about $10,710. The remaining $80,000 flows as a distribution. Your savings, over $10,000 per year. The higher your income, the bigger the gap. Now, here is the critical thing the IRS cares about. The salary you pay yourself must be reasonable. You cannot earn $150,000 and pay yourself a $20,000 salary to dodge FICA. The IRS will reclassify your distributions as wages and hit you with penalties. Reasonable means what someone in your role with your skills in your market would earn. For most freelancers, setting salary at about 50 to 60% of net profit is a defensible range, but there is no single magic number. Look at industry data for your specific field. Let me talk about the costs, because an S-Corp is not free to run. You will need to run payroll, even if you are the only employee. Payroll services like Gusto or Wave run between $40 and $100 a month. You will also file a separate business tax return, Form 1120-S, in addition to your personal return. That means higher tax prep fees, usually $500 to $1,500 more than a Schedule C filing. Many states charge a separate S-Corp filing fee or franchise tax. California, for example, charges an $800 minimum franchise tax. So add up your costs. Payroll at $600 to $1,200 a year. Extra tax prep at $500 to $1,500. State fees vary. You are looking at roughly $1,500 to $3,000 in additional annual costs to maintain an S-Corp. This is why I say $75,000 is the general threshold where it starts making sense. Below that, the savings might not outweigh the costs and complexity. Above that, the math tilts heavily in your favor. Now let us talk about how to actually file Form 2553. The form itself is only 4 pages. You can download it directly from irs.gov. You need your EIN, which is your employer identification number. If you do not have one, you can apply online at irs.gov and get it instantly. Fill out your business name, address, the effective date of election, and your tax year. All shareholders must sign. If you are a single-member LLC, that is just you. You can mail it to the IRS Service Center for your state, or you can fax it. Yes, the IRS still accepts faxes, and many tax professionals actually prefer faxing because you get a confirmation page. The mailing address and fax number are listed in the Form 2553 instructions based on your state. The deadline is March 17, 2026, for the election to be effective for the full 2026 tax year. That is because March 15th falls on a Sunday, so the deadline moves to the next business day. What if you miss the deadline? Late election relief does exist under Revenue Procedure 2013-30. If you can show reasonable cause for the late filing and you intended to be treated as an S-Corp from the start of the year, the IRS may grant the election retroactively, but this is not guaranteed. It adds paperwork, stress, and uncertainty. Do not count on it. File on time. A few more things to consider. An S-Corp election does not change your QBI deduction. You still get the 20% qualified business income deduction on your pass-through income, which is now permanent under the One Big Beautiful Bill Act. It also does not prevent you from contributing to a solo 401k or SEP IRA. In fact, your S-Corp can make employer contributions of up to 25% of your W-2 salary to a SEP IRA, or the employer portion of a solo 401k, up to the $70,000 combined limit for 2026. So retirement savings still work. They just key off your W-2 salary instead of your net self-employment income. Here is my bottom line recommendation. If your net freelance profit is consistently above $75,000, strongly consider the S-Corp election. Run the numbers with your specific income, state taxes, and estimated compliance costs. If the savings are at least $2,000 to $3,000 more than the costs, it is worth it. If you are on the fence, talk to a CPA before March 17th. But do not wait until March 16th to start this conversation. Download Form 25553 today, get your numbers together, and make a decision this week. This deadline does not wait for anyone.